What if you could trade options every single day and make a profit, and at the same time hedge your portfolio and reduce your risk? Yeah, every single day you're a winner, and on the days that you're not, you just roll to the next day and wait for the market to move back. What do you think you could do over time? Say a year or two. You just scale up and you print money. Now you're living the life of luxury. Not to mention the instant gratification that you would feel and the control over your money. No more money concerns. In today's video, we're going to really dig in and cover exactly how we made $295 in one day and $2,500 over the last 60 days. Basically, $300 per week trading 0 DTE SPX options. We'll dig into the details of exactly when and why we opened and closed the trades this last Friday to make that $295 in the one day. And you guys can use these same strategies every day. This video is a little more advanced, so if you really want to know in general why we trade 0 DTE SPX options and how we place a 0 DTE SPX trade, then I'll put a link down below at the end of this video so that you can click on it, and it goes into the details of those questions in a video that I made previously. So if you're new to 0 DTE SPX options, be sure and watch that one as well. Hey guys, Darren here. We've got a great video for you here today. However, before we start, if you appreciate the research and effort that goes into making videos like this, all I ask is that you hit that like and subscribe button so that we get this video out to as many people as possible. It really helps out the channel and I appreciate it very much, so thank you. Today we're covering 0 DTE SPX options and how we can make a lot of money utilizing them while hedging our portfolio and reducing risk at the same time. I think it's super important that we understand all the different ways that the rich are getting richer. We can use the same tools and strategies in our portfolios so that we can increase our profits and reduce risk at the same time. Also, be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Guys, 0 DTE SPX options are a hot topic these days. And why not? I can definitely see why. Who would want to wait a year or more to profit when we can do it right away? I'd rather profit sooner than later. Let's take a look at where we are with SPX today versus the historical average. Here's a chart of SPX since 2009. You can see it is a little above the historical trend line from 2009 to present. For this reason, I currently like to sell SPX call credit spreads to hedge my portfolio and protect against down moves. Let's take a look at the performance showing a $295 profit in one day and $2,505 over the last 60 days. If you look at the option order chain on the Tastytrade platform over the last 60 days, you see that we have made $2,505. And just on Friday, October 27th, we opened and closed SPX call credit spreads twice during the same day and made $85 and then $210 for a total of $295 for the day. How did we make $295 in one day selling SPX call credit spreads? Here's the one-day chart for the SPX on October 27th. I'm in California, so we are Pacific Standard Time, and the market opens at 6:30 a.m. in the morning and closes at 1 p.m. in the afternoon. So what do we do at market open? Well, just prior to the market open, I look at the futures to see if the market is going to open higher or lower. /ES is the S&P 500, which is also similar to SPX or the same as SPX. You can see from here that the market is expected to open 0.48% lower from this clip out from the Tastytrade platform. By the way, Tastytrade is one of the best and most intuitive for trading options. These are the guys that developed the TOS, Think or Swim option trading platform, and then sold it to TD Ameritrade. TD and Schwab use that platform still to this day. Tastytrade is even better. Use the link below to open an account with Tastytrade and get cash back. I do recommend that you open with at least a couple $1,000 so that you can place a few different trades. Okay, looking at the one-day chart for SPX for Friday, October 27th, let's see what we did and why we did it. On this day, we saw from the /ES futures that the market was going to open higher. That is where you see this gap up at opening. This would have been a great time in retrospect to sell the call credit spread. However, I don't like to trade right at market open. I like to watch for the first 20 to 30 minutes to see what the market does so that it doesn't give me that head fake and go the other way, which it often does. Well, you can see in the first 30 minutes it went straight down. So I really don't want to place a call credit spread right after the market takes a big move down, hoping it will continue, so I wait. Then at 7:55 a.m., we had an inverted hammer and a little red downtick indicating that we may move lower. I was chomping at the bit wanting to put this trade on since I had a lot of long deltas in my portfolio. So I sold the 41.45 41.50 call credit spread and collected $260 credit. So what do you think the market did? It went up. So at this point, I went on with my day, doing other things and kind of keeping my eye on the market to see what it did. Out of the corner of my eye. Well, it went all the way up to about 41.56 at 8:15 in the morning. Now this is when we can't panic. Worst case, at the end of the day, our max loss on a $5 wide credit spread is the width of the spread minus the credit collected. So in this case, it would be $5 minus $2.60 or $2.40, which is really $240 since one option contract controls 100 shares of stock. However, at the end of the day, I would just roll to the next day prior to the market close anyway and collect additional credit, so I wasn't too worried. Also, the market hadn't even been open 2 hours yet, so I knew there was a good chance that the market might come back down. Sure enough, from there it started to fall. As you can see, I sold at 9:27 a.m. for 175. So it was the 260 collected when we sold the credit spread, thus the term credit, minus the 175 cost to close for a $85 profit in about an hour and a half. So I took everything off and the market started to go down. At this point, what do you think I'm looking for? Yeah, move up in the market so I can rinse and repeat and do it again. Well, the market doesn't always do what we want when we want. However, we need to stay patient. I watched as the market trended down and kept going. Yes, lower lows and lower lows. At some point, since my portfolio is long deltas, I wanted to get the trade back on to get some negative deltas and make some money in case the market just kept moving lower. We have wars going on in the world right now. We've got inflation and higher interest rates for longer periods of time. And I wanted to make money on both sides of the market and hedge my long positions. So at 11:35 a.m., I couldn't hold back any longer and I had to pull the trigger. I sold the at the money 41.15, 41.20 call credit spread and collected $250. Sure, the market was down on the day quite a bit, but it was continuing to trend down overall. So as soon as I saw another move up with an inverted hammer with some red topping out, I sold the call credit spread looking for a further down move. It continued up, then down, then up, and then down again. Guys, this is where you kind of just need to understand that, hey, at the end of the day, I need some negative deltas, and the market is really choppy right now. Worst case, just prior to close, I'm going to double the width of my spreads and roll to the next day to collect more premium. I need it anyway to balance out my portfolio on the up move. As you can see, at 12:50 p.m. in the afternoon, just prior to market close, I closed out the trade for $40 cost. So the $250 collected minus the $40 cost to close gave me a profit of $210 on that trade. Coupled with my earlier $85 profit, that provided a $295 profit for the day. One lesson I've learned, guys, because it's unfortunately happened to me. If you have a good profit, 30 minutes prior to the close, just take it. Too many times the market makes big moves in the last 30 minutes just prior to the close. What do you think happened just prior to the close in this case? Pop back up. As you can see from this chart, in the last 20 minutes, it went from 41.05 and closed at 41.17. So if I would have held to the close, it would have fallen right between my 41.15 and 41.20 call spread. So my $210 profit would have been washed away in the last 20 minutes. All right, guys, here's a quick recap of the day on the one-day chart on the Tasty Trade platform. Remember to sign up for that using the link below. We sold the 41.45 41.50 call credit spread at 7:55 a.m. and collected $260. We then closed at 9:31 a.m. an hour and a half later for an $85 profit. We waited for an uptick on a downtrending market and rinsed and repeated by selling the 41.15 41.20 call credit spread and collecting another $250 credit. We finally bought back and closed at 12.50 just prior to the market close for a $210 profit. So $295 for the day and $2,505 over the last 2 months, and that's basically $12.50 per month in additional income trading both sides of the market. We always want to look closely at the charts and use technicals to profit on both sides of the market utilizing options. All right, guys, if you're a beginner and this sounded a little confusing, don't worry. It did for me as well at first. We'll continue to learn together and succeed. I put a link down below for the free options workshop. Be sure and grab that. Be sure and hit like and subscribe. I really appreciate it. Leave me a comment below. Let me know what you're trading. Are you trading zero DTE SPX options or something else that you're having success with? Look forward to hearing from you. Have a great day. See you in the next one.